Up next, we break down the latest happenings in the grain market. Joining us this week was Darin Fessler of Lakefront Futures and Options. As the week began, it was a risk-off market for all sectors. As we've continued through the week, the outside equities continued to be a concern regarding inflation. We discussed those topics and more with Darin on Wednesday afternoon, but began the conversation by getting his general thoughts on the grain markets.
You know, I think there's a lot of things that are affecting it, and it's probably more or less outside markets right now. This week so far, I think you've seen a nice little bump up here leading up to the recording here, where progress numbers still very, very slow. And I think that has a little bit people concerned in case those models do change. I'm not too concerned about how Illinois is going to look. I think Illinois is going to hammer out a lot of acres this week, and then Iowa as well, Nebraska. But where I am more concerned, longer term, medium term, is the Dakotas, North Dakota in particular. That could have some bigger impacts as we go on here and we approach that June 30th report where we'll get that acreage adjustment.
I'm glad you mentioned the crop progress because Jim in Southwest Nebraska wrote us this week and wanted us to ask you, is too much attention being paid to the crop progress reports each week? Based on what you're saying, it sounds like there's reason to be concerned more north of us, right? Yeah,
I mean, I think the crop progress, it's important to note how the planting progress is going. I think where the weekly reports get kind of nonchalant is like, okay, the good to excellent ratings are XYZ this week, and then they'll get a next one next week. I mean, that to me gets kind of redundant after a while. I mean, but the crop progress, the harvest numbers are probably much more important here. But again, I think it all comes down to how does North Dakota pan out here over the next week or two, because we're already stretching their season out. I already have clients that have switched from 82, 85 day corn to 75, 78 day corn. Does those acres get into prevent plant? Do they switch to beans? I think there's a lot of scenarios to play themselves out here, and watch that spring wheat market as well. There's a lot of guys in the western parts of North Dakota have zero planted. So I think given that they came off a drought last year, now they're having some water issues, that spring wheat market could still be a one to watch.
Things change quickly, that's
yes,
for
do.
Sure. Darin, I want to get your thoughts about the corn market in particular right now. Let's start out there. Do you think we've already realized a top in that market?
I think it's way too soon to say that a top is in place. Certainly, if we continue to see outside issues within the equity markets, economic numbers continue to deteriorate, I think that, one, it's going to continue to put pressure on that, or at least the idea of like, okay, we got to back off some of this stuff, take the risk off the table from a managed money standpoint. But when you start to see the CPI data, the inflation data start to come out, and that's still that inflationary type trade that's going to go on here. So where the equity markets may continue to have pressure, I think commodities are going to be the last shoe that drops because of the inflation, and I think that is going to start with crude oil, and crude oil so far has had a pretty nice week.
Any difference of opinion when it comes to soybeans?
Soybeans, I think you got to get through the growing season. We're not even have it planted yet, and so ask me that question. Let's say in middle of July, or August. I think that's going to be a bigger determining factor here. But right now, some of these markets are tracking 2008 price patterns very, very closely, like say D22 corn versus 2008 corn. Almost 94% correlation there. I think those are things we got to keep in the back burner of our mind here. We got good prices. We just need to continue to scale in here and reward it as it comes.
You say ask you after the growing season, but there are people that still have old crop that are wondering what to do. Should they hold on for a little bit longer? What are your thoughts on that?
I'm a fan. These are still good opportunities. I think that if we run into some weather issues, I think first off, you have to watch the spread action. I think always that they are the canary in a coal mine so far. The beans and the corn spread action has been a little bit weak, but if you run into weather issues, being front month led with that July, I think that higher highs could come here, but it more likely is going to be December led.
You referenced the funds. I want to get to a second viewer question we had. They asked, what are the funds telling us about the corn and soybean market's potential to move higher in the near future?
And the near future move is all going to be dependent on the planting progress and how this crop initially gets off to the start. Then it's going to come back to how are these outside markets going to look. If we continue to have the pressure, like I said, with, say, the equity markets, with economic numbers, eventually it's going to flow down to the commodities. But again, because of the inflationary stuff that we've seen over the last 40 years, they're not going to be easily backed off here. So again, commodities are going to be strong until we start selling off here, like say crude oil. That's going to be the first indicator.
You referenced the outside markets having influence on the commodities. What's impacting those outside markets in part has been this COVID surge. We saw that in China. It's creeping its way back here in the United States. So is that front of mind for the traders right now?
I don't think at the moment is the forefront. I think it's something that they're taking note of, what's going on in China. Obviously, with all the chip shortages, supply shortages, and the backup of ships that are trying to get stuff basically off the ports there. I think that is what's on the forefront of traders' minds. But COVID in the U.S., not at the moment.
What are some ways that a producer can protect themselves when it comes to risk right now?
One, simply just make some sales, HTAs. If you want to step out there, even though some of the puts have increased in volatility, I think you can go out there, you can buy some puts, you can sell some calls, put it into a collar, but just keep in mind when you sell those calls, they are a marginable type position, or like I said, just scale up as we go here. About every 50 to 70 cents, if you get that in the corn market, again, at 50 to 70 cents in the beans, just continue to scale up here, and I think you'll be just fine at these levels.
All right, final word is yours this week. What else would you like to leave our viewers with?
I think, one, you got to watch the outside markets. I continue to focus on that. I continue to tell subscribers that the outside markets will have eventually a larger impact on this commodity market as a whole.